I'm sure you've been following the Facebook news, the market volatility. I know the answer is often that early stage venture capitalists don't think about these things. But with tech regulation looming, with bigger questions being asked about tech ethics, is that impacting any of the decisions you're making on the front lines?
No, that's a great question. And I will say that, when we make investments, we really are making them for the long term. And so while we're seeing a lot of, I'd say, daily changes in the narrative around what's going to happen with regulation and Facebook, I'd say we have some time to figure that out. One thing I will say, though, is when you look back historically and you take large monopolies that do get regulated, it oftentimes actually creates opportunities for venture investors. So, I look forward to seeing how this plays out.
Trae, you're credited with helping fund Nest in your earlier days at Kleiner Perkins, finding Dropcam, which Nest bought. These are companies that are at the center of issues around data privacy. I mean, do you think how we think about these things are going to fundamentally change as we bring more and more technology into our homes?
Absolutely. So I'd say whenever you're adopting a new technology, the consumer has to make a trade-off. Is the privacy that I'm giving up, worth the benefit that I'm receiving? And it's not always obvious. When I invested in Dropcam several years ago now, it wasn't clear that people were going to want to have cameras in their house. I think what we've seen since then is that the benefit that people do get from the peace of mind, the ability to drop in, see what's going on, and also I'd say the really important elements of security and privacy that companies like Google, now Dropcam is owned by Google as a Nest Cam, have been really important in being at the forefront of laying down the right dialogue with their customers around privacy.
Now, when you launched Defy, you wrote a post titled, "Do we need another venture capital firm?" To which the rhetorical answer is no, but obviously you think there's an opportunity here that's not being exploited. What do you plan to do differently?
Yeah, no, I mean, when I was at Kleiner, I remember, and as I was looking at leaving, a lot of folks asked, hey, you're going to start a new fund. And it wasn't obvious to me at the beginning, partly because the venture ecosystem is overfunded. But once I was working closely with seed-funded entrepreneurs and helping them navigate raising money as they went forward, that perspective gave me a total different view of the ecosystem. That money is not evenly distributed, across seed, through middle, through late stage funding. And what my partner Neil Sequeira and I realized when we came together to start Defy.VC, our new venture firm, is that the traditional early stage venture funds with success have all gone bigger and have tended to invest later stage. And so while you have this incredibly flourishing seed ecosystem, you have the traditional venture folks that have moved later. And it's left a bit of a gap in the middle. And so we were meeting with lots of seed-funded founders who had great ideas, really some nice early traction, but not enough traction to go raise a $10+ million round. What they wanted were a venture capitalist to invest money, $3 to $6 million, get on the board, work closely with the team to really help them navigate product market fit, professionalize the board, build the team, and get them in the position to go raise growth funding.
So you're announcing an investment in Agentology, which helps real estate agents deal with the inflow of leads that come in from, the success of tech platforms like Zillow, like Redfin. Obviously, you see hundreds of companies. Why this?
Yeah, no, so there are several reasons that we got excited about this particular company. One thread that we see through a lot of our investments is we love investing in what we call authentic founders. So these are founders who have really lived this problem, and so they understand it in a way that your maybe typical tech founder would not. So in Agentology's case, David Tull was actually a real estate agent for 8 years. He understood this problem. Fortunately for him, his brother was a tech founder, so he and his brother teamed up. They surrounded themselves with other folks from the tech industry to basically figure out how to solve this problem for themselves. And so when David addresses his customers, the agents, he can do it with a whole different level of authenticity.
Now, last quick question, Trae, and I know this isn't a quick question, but you were very involved in the Elephant in the Valley survey, which talking about how big a problem harassment and discrimination is across the industry. You're involved in AllRaise, a new nonprofit to help increase funding that goes to female founders, diversity in venture capital firms. Quickly, is this really a movement or is this a moment? We've got like 20 seconds here.
It's a building movement. It started a long time ago, and I think right now we're starting to see critical mass. We now have a number of women who are in positions of power in their firms, who are writing checks, who are starting new firms, and it's really starting to make a difference.